In this video, I'm going to be showing you one of the most important part of technical analysis, whether you are a beginner or you are a pro. And this is called top-down analysis or directional bias. You see, the problem is a lot of people ignore top-down analysis whenever they want to take a trade. They only look out for pattern structure when they want to take a trade, and this alone has made them to incur a lot of losses because they don't know where the trend is coming from and where the trend is going to. And this is the most important part of trading. Once you understand this, you see that you begin to have a high win rate. And in this video, I'm going to be showing you a step-by-step approach you can use to understand directional bias or top-down analysis using any trading model that you use. All right, and this alone is going to help to increase your win rate in any trading system that you trade. And if you're new to this channel, my name is Vetes and I trade forex and synthetic indices. All I do is I look out for what works and what doesn't work. I come here and I show you how you can do this effectively. So let's go hop onto the chart and let me show you how you can do this directional bias or top-down analysis the proper way. So basically, top-down analysis simply means identifying the market trend on a larger time frame and then narrowing it down to a smaller time frame where you can have your trading opportunity, such as you understand where the market is coming from and where it's going to on the higher time frame, like the weekly or the daily, and then you narrow it down to the smaller time frame, such as the 1 hour, 30 minutes, 15 minutes, where you can get your entry, your potential entry, and your exit point. Okay, so you analyze the market on the higher time frame because you cannot take a trade on the higher time frame. You just have to understand, because if a trend is bullish on the weekly time frame or the daily time frame, that is what is going to influence the movement of the trend in 30 minutes or 1 hour or 15 minutes. Okay, so once you understand that the market is bullish on the weekly time frame or is bullish on the daily time frame, all you have to do is that when you come to your smaller time frame for trading opportunity, you are not going to start selling when the market is bullish. That is going to make you to take some losses because you are not following the trend. So if market is bullish on the higher time frame, like the 1 hour, like the weekly, the daily, the 4 hour, that bullish movement is what is going to influence the movement of your entry on the smaller time frame. So that is just the basic of top-down analysis. Okay, so for the purpose of this video, if you trade support and resistance, trend line, liquidity, you trade SMC, you trade whatever trading model you use, okay, if you apply this approach, like from your higher time frame down to your lower time frame, if you are trading support and resistance or SMC on the weekly time frame, if you identify the trend that the trend is bullish on the weekly time frame, when you are looking for trading opportunity on the smaller time frame, you are going to start looking for buy opportunity and not sell opportunity. So you identify the trend on the higher time frame and then you flow with the trend on the higher time frame. So for the purpose of this video, I'm going to be using the advanced market structure setup, and then I'll show you how you can do your top-down analysis using this same model. And if you don't understand the advanced market structure, I already dropped a full video on it. If you check my playlist, you'll see advanced market structure where I dropped the full course on the advanced market structure. So you take your time to go through those videos and it's going to help you a lot to in your trading. Okay, if you are new to forex, if you go through those lessons, you are going to be understanding the advanced market structure. But I'm still going to break it down in this video and then do top-down analysis with it. So for the advanced market structure, there are 5 rules that guide the advanced market structure. So for the purpose of this video, I'm going to be using the illustration first, okay, for the 5 rules that guide the advanced market structure. Okay, so first of all, number 1, there must be a sweep of liquidity. Okay, you must have your sweep of liquidity. This is the liquidity that is being created, right? The higher high here is the liquidity that is being created. So this liquidity must be sweep, which is the first rules that guide the advanced market structure. Okay, so there must be a sweep of liquidity. Okay, so this liquidity has been swept by this. All right, and the second rule is there must be a break of structure to the opposite direction. So this is a break of structure to the opposite direction. Now this becomes your break of structure. Okay, I'm going to mark it. This is a break of structure to the opposite direction. All right, this is which is rule number 2. Okay, and rule number 3 says what? There must be a 50% retracement to be taken out. Okay, now this is going to be our 50% retracement that will be taken out. If you check from this place to this point, and this is up to 50%, you can use your Fibonacci to actually trace it. This is 50% retracement to the opposite direction. And rule number 4 said that there must be another break of structure, which is this. Okay, there must be another break of structure, which is this. Okay, so we have 2 break of structure. This is rule number 4. And rule number 5 said that price must retrace back to take the newly created liquidity and continue to the opposite direction, which is rule number 5. And these are the rules that guide the advanced market structure. Rule number 1, there must be a sweep of liquidity. All right. Rule number 2, there must be a second break of structure to the opposite direction. Rule number 3, price must retrace back 50%, all right, to be taken out later. And rule number 5, which is this, price must retrace back to take the newly created liquidity, which is this liquidity. This was the first liquidity we had, and this is the second liquidity that we have. So price must retrace back to take out this second liquidity, okay, and continue to the opposite direction. So in that essence, this is our transactional liquidity, this is our structural liquidity. So let me mark it down. This is our transactional liquidity, and this is our structural liquidity. So from the advanced market structure, this transactional liquidity is used for correction, okay, and this structural liquidity is used for continuation. That is why when price retraces back into this POI, it continues to the opposite direction, and then this is our protected high. Okay, so from this point to this point is our POI, which is our point of interest. That is where we enter our trade. That is where we take our trade from. Okay, and then price continue to the opposite direction. So this is the advanced market structure. Okay, slightly above here will be our TP, SL, and this is our target for TP. So this is basically the advanced market structure when you want to sell. Okay, you can apply this with crypto, you can apply this with currency, you can apply it with synthetic, and this works like magic. Okay, and then the same thing you do when you want to sell is the same thing you do when you want to buy. Okay, this is our first sweep of liquidity, second break of structure, price retrace back 50%, give us another break of structure. Okay, and then price came back to take out the newly created liquidity and continue to the opposite direction. So this is the same thing you do for buy, the same thing you do when you want to sell. Okay, so now in applying this to top-down analysis, okay, applying this to top-down analysis, if you go to the weekly time frame, okay, if you go to the weekly time frame and then you see your sweep of liquidity on the weekly time frame, excuse me, you go to the weekly time frame and then you see your sweep of liquidity on the weekly time frame. All right, you see that price broke structure to the opposite direction, and then price retraced back 50%, and then price break another structure to the opposite direction, and you see that price come back into this POI to take out this newly created liquidity on the weekly time frame. Okay, now what you're going to do now is scale down to the lower time frame, which is the daily. Okay, once you scale down to the daily time frame, which is your another lower time frame, if you don't see this, you want to do top-down analysis. All right, if you don't see this on the weekly time frame, you come back to the daily time frame. Okay, this what this is going to give you is that if you see that your trend is bullish, okay, if the trend is bullish and you want to buy, or the trend is bearish and you want to sell, okay, and you check the weekly time frame, if you see this structure on the weekly time frame, all right, it simply means the trend is about to start selling. Once price has taken out the structural liquidity on the weekly time frame, you know that price will start selling to the opposite direction. Okay, and if price build, and if you don't see this on the weekly time frame, you go to the 24-hour time frame. All right, if you don't see this on the 24-hour time frame, you can check the 4-hour time frame. All right, so for the purpose of this video, let's say we saw this, okay, on the weekly time frame, or let's say we see this on the 24-hour time frame, and then you see that price has taken out this structural liquidity, and this is our POI on the daily time frame. This is our POI on the daily time frame, and price has already taken out the structural liquidity, and you see that price want to start selling on the 24-hour time frame. Okay, you see that price is moving like this on the 24-hour time frame. So what do you do in this essence? Okay, now 24-hour time frame is also used for another higher time frame. You can't take trade on the higher time frame on 24 hours, so you have to scale down to the 4-hour time frame for the purpose of, based on experience and based on research so far. Once you use your weekly, your 24-hour and your 4-hour time frame, okay, for these are your higher time frame. That is where you need to identify your higher time frame if you are trading this advanced market structure. So now on the 4-hour time frame, you see this structure again on the 4-hour time frame. Take for example, on the weekly time frame, we saw this. Okay, we saw this structure that the price is bearish, and then on the 24-hour, we still see the same thing, that the price is bearish. Now we scale down to our 15 minutes time frame or 30 minutes time frame. Okay, and then once you scale down to our 15 minutes or 30 minutes time frame, we see that price is also still is giving us this structure like this, okay. Now this is going to be our A plus setup. All right, this is going to be our A plus setup, which is a continuation. Remember, the weekly time frame is the higher time frame. The 24-hour time frame is also higher time frame. The 4-hour time frame is also higher time frame. The reason why you are taking trade on the lower time frame after you've done your analysis, the top-down analysis on the higher time frame, is because if you enter a trade on the 4-hour time frame or on the 1-hour time frame or the weekly on the 24-hour time frame, your drawdown is going to be so much. All right, and that will easily blow up your account. So that is why, if you understand where the market is going to on the weekly time frame, 24-hour time frame, 4-hour time frame, which means the momentum the price is using to move at that point is very strong. So if price is bearish, you don't need to start buying, you have to follow the trend. That is why you do your analysis on the higher time frame, you know where the price is coming from, the higher time frame, then scale down to the lower time frame, and then you follow the trend. So now this is our structure. This structure align with our weekly, daily, and 4-hour time frame. Now we'll scale down to 15 minutes time frame, and we'll see that this structure is forming, has already formed. Okay, this our advanced market structure has already formed. What we are going to do next is, this is going to be our A plus setup, all right, which is type 1 setup, and then our POI will be here. Okay, so for the purpose of this, you see that once price come into this, price move, and you come into this POI, is going to sell to our direction. All right, and that is how this basically work. Okay, this is how you are going to start having high win rate. If you apply the same method with SMC, support and resistance, top-down analysis, directional bias, okay, this is what is going to give you high win rate. So you are going to start looking for more structure until this target is taken out on the higher time frame, which is your weekly, your daily, or your 4-hour time frame. Okay, once this target is taken out, then you wait it out. You start waiting for another structure to form on the higher time frame before you look out for buy or look out for sell. So the same thing you do when you want to buy, the same thing you are going to do whenever you want to sell. Okay, so just look at it, it's still the same thing. So now let's do a proper example using our charts. Okay, let's look out for this using our chart. Okay, and if price just come to your POI, don't just say there's something called supply and demand. Okay, I already made a video about supply and demand, so if you check that playlist where I explain supply and demand, that is what is going to help you to know when to take the trade, understand confirmation entry, and then there are some trade you need to avoid when price doesn't give you confirmation. So that has to do with confirmation entry, supply and demand. So for the purpose of this video, I don't know the confirmation entry you use in your trading model, but if you apply this top-down analysis method to your trading system, you see you're going to start having more win rate combined with your confirmation entry you use to take your trade. All right, so I already explained the confirmation entry, supply and demand for the advanced market structure in my playlist where I name it advanced market structure. So after this video, you watch that video, you combine it with this, and then you're going to have total understanding. So let's do an example for one of these, for the top-down analysis on, let's say, let's choose V51s for example. Okay, let me show you what top-down analysis is and how one of the trade I took recently. I'm also going to show you in that place. Okay, so if you look at this chart closely, let's switch to the 8-hour time frame. Okay, now this is the 8-hour time frame. All right, you can see, first of all, you see there's a sweep of liquidity here. Okay, this is our first sweep of liquidity. This is volatility 51 and synthetic indices on the rise, and this is our protected high. You see that this is higher time frame, 8-hour time frame. Okay, and then this is our first break of structure. And then this is our structural liquidity. This is the 50% retracement to be taken out later, which is our structural liquidity. This is it. All right, and then this is the second break of structure. You know, it breaks structure to the opposite direction, which gives us our second break of structure. All right, and what did price do? Oh, it was supposed to be at this point. You're using 4-hour time frame. Okay. All right, this is our first break of structure, which is this. It's looking tiny because of we are using the higher time frame, and then this is our price break structure to the opposite direction. Okay, this is our first break of structure, sweep of liquidity, first break of structure, and then price retrace 50% to give us our second break of structure, which give us our structural liquidity. All right, this is the second break of structure. This is our second break of structure. Okay, and then this is a protected high. All right, now this is 24-hour time frame. This is our 4-hour time frame. On the 24-hour time frame, the price is bearish. On the 4-hour time frame, the price is also bearish. Okay, and then what are we going to do? We scale down to our lower time frame. This is, let's check the 30-minute time frame. We are still going to see this structure now. From the 30 minutes time frame to 15 minutes time frame to 10 minutes time frame, that is the time frame you use for our to look for our setup and then our trading opportunity. So on this 30 minutes time frame, what do you see? We have our sweep of liquidity here. All right, And then we have our first break of structure. And then we have price retrace 50% to give us our structural liquidity, which give us this. And then price come back, break another structure, which give us our second break of structure. Okay. And what did price do? Price retraced back into to take out this newly created liquidity and continue to the opposite direction, which give us our 5 rules of the advanced market structure. So the same thing you see on the higher time frame, if you apply it on the lower time frame, which is the 30 minutes, the 15 minutes, the 10 minutes, and the 5 minutes, you're still going to obey the same rules as long as you follow all the 5 rules of the advanced market structure. And then this is our protected high. All right. So this point is our POI, point of interest, where price will come into, all right, give us confirmation and then sell to the opposite direction, which is going to take out this low here. And what did price do? As price get into this POI, which obeys our 5th rules of the advanced market structure, see, price will come back to take out this newly created liquidity and continue to the opposite direction. So as price get into this POI to continue to the opposite direction, it sell off and then smashes our target. So this is it. So from any trading system you trade at all, okay, if you follow these same rules, you are still going to get the same result. For every trading system you trade, if you follow this same rule, you are still going to get the same trading. You are still going to get the same result. Okay, and let's do another analysis when we want to buy. Okay, let's check V10. V10 is bullish on the weekly time frame. Okay, it's bullish on the weekly time frame, and on the 4-hour time frame, let's check where V10 is going to. So on the 4-hour time frame, V10 is still bullish. This simply means it aligns with our weekly time frame and it also aligns with our daily and our 4-hour time frame. So what can you see in this point here? You see, first of all, we have our sweep of liquidity. Secondly, we have price giving us our first break of structure, which is this. Thirdly, what did price do? Price retrace will give us our 50% retracement, which is this. Alright, and what did it do? It breaks structure to the opposite direction, giving us our second break of structure, which is this. And then what is price going to still do? Price is going to come back to take out this newly created liquidity, which is the structural liquidity, and continue to the opposite direction, which it has done here on the 4-hour time frame. But remember, we can't take a trade on the 4-hour time frame. Once price align with our 4-hour time frame, once we know the direction of the higher time frame, we'll scale down to the 30 minutes or the 15 minutes or the 5 minutes or the 10 minutes to get our trading opportunity. So now, since we know that price is moving on the 4-hour time frame and price is bullish on the weekly and is bullish on the 4-hour time frame, what are we going to do? We're going to scale down to the 30 minutes time frame to see for possible trading opportunity. Okay, if you don't see anything on the 15 minutes, what do you on the 30 minutes? You go to the 15 minutes time frame. And on the 15 minutes, we have our break of structure here. Right, we have our first sweep of liquidity, which is this. Okay, this is our first sweep of liquidity. We have our first sweep of liquidity following the rules of the advanced market structure, and then price giving us our first break of structure, which is this, to the opposite direction. And what else again? Price retraced back 50% to give us our newly created liquidity. And what did price do? Price break another structure to the opposite direction, giving us our second break of structure, making this an A plus setup. Okay, and what is price going to do? Price is going to come back and take out this newly created liquidity. And what has it did? It come back, take out this newly created liquidity and continue to the opposite direction. Okay, so what happened here? As price tap into our POI, okay, it bought to the upside and then smashes our target. So if you take the trade, you make profit from it, following the rules of the advanced market structure. Okay, I've already dropped the full course on my playlist, the advanced market structure. So all you have to do, you just have to go and watch everything from market structure, POI, liquidity, supply and demand, confirmation entry, and that is what is going to, you're going to see that you start making progress in your trading result if you follow everything you learn from this video. So this is it. All right, top down analysis, giving you direction from the higher time frame, scaling down to your lower time frame, and you see that this is all you need in your trading system. And I believe you will learn something from this video. So if you are new to this channel, if you are watching this video for the first time, don't forget to like, comment, subscribe to this channel, and share this video to your friends. And don't forget to join our Telegram community, where I'm going to start dropping setup signals and also offer one-on-one mentorship for you to learn directly from me and then scale up your trading journey. Okay, so if you want to sign up on synthetic indices, there is a link to that on my description of this video. And also you can reach out to me on WhatsApp if you have any question, or drop a comment in the comment section of this video whenever you're having confusion. I'm sure I'm going to put you through step by step. All right, hope you learned something from this video. Don't forget to, like I said earlier, don't forget to like, share, subscribe. I'll see you on the next